Hey everyone, my name is Hunter Molzon, and today I'm going to give a little bit of a rant on what I think it takes to succeed with an e-commerce business in the current landscape and economy. A lot has changed over the last 10 years or so, from the early days of e-commerce to what I would consider a much more matured industry at this point. And I've noticed that a lot of the businesses I interact with, or the colleagues I have, the people I consult with, are struggling to make a business that is A, not a nightmare to run, and B, can throw off a profit, and C, scale, right? And I think really what's happened is that there's been, again, a maturation of the industry, and people are still kind of stuck in the paradigm of the last 10 years. So for those who don't know who I am, I started working in e-commerce in 2009 as a UI UX engineer focused on conversion rate optimization. I started my first e-commerce company in 2011. On a nascent platform, Shopify back then, and then started my current e-commerce company that I still own and operate, Barbell Apparel, in 2013, which we have bootstrapped to over $50 million in cumulative revenue and an 8-figure run rate. And the benefit of that is that I've, along the way, built out basically every aspect of the marketing organization, all of the business development, all of it myself from scratch. Now I have a lot of team members that help me run all that stuff, but at some point I have been the one actually operating all of the emails, all of the ad accounts, all of the Shopify stuff. I've been, the responsible party for the P&L for the entire life of the business. And so I just know how all of these things work together to either create success or failure in terms of bottom line profit, ability to scale, things like that. I've also had the benefit of consulting with dozens of businesses, anywhere from $1 million a year in revenue all the way to $40 million a year in revenue. And so I can see how these things play out across a range of business sizes, verticals, industries, expertise levels, etc., and hopefully impart some of that knowledge onto you on how to make your business run better, throw off a profit, and be able to scale. So let's kind of talk about the background of why I think where we're at and why a lot of people have misconceptions on how these businesses work. So going back to the beginning of my career in 2009 or so, the e-commerce darlings at the time were like Bonobos. There was a lot of group buy websites. I'm sure you guys remember like Guilt or Hotlick, or maybe not, but a lot of these things came on the scene with a ton of venture capital. And really the way they ran their businesses was acquiring customers at any cost. It didn't matter if they made a profit as long as they were growing top line revenue, right? And that went on for a long time, right? The problem is it created a paradigm where people were more than happy to create businesses that were kind of inherently unsustainable and never really built to scale without just dumpster firing money, right? Like if we just light a bunch of money on fire, we can grow our top line revenue. Maybe a VC firm buys us out, or we can go public or get acquired by a strategic. And that was really the entire play. A lot of those businesses either got acquired with a deal that was either good or terrible. A lot of them no longer exist, right? And so really after the COVID era, all of the loose money dried up, and now we're kind of left with a matured industry that is no longer super attractive to piles of VC money. They've moved on to other things. And so if we want to build businesses that actually make sense to run, they need to be profitable. They need to be profitable in their own right. And the benefit of that is that a profitable business is much less stressful to run than a business that's reliant on outside capital all the time, right? And so what we want to do is identify ways to make our business inherently profitable and inherently scalable. That way we can scale it over time, reach our profit goals, reach our revenue goals, and if we exit, then awesome. And if not, hopefully we build a business that can grow forever and that makes sense to run forever, right? Like if your business is low stress and throwing off profit, then hey, maybe you just run the thing forever. And if someone buys you, awesome. And if someone doesn't, also that's fine. And that puts a lot more of the agency in your own domain as opposed to relying on someone else to save you eventually, right? And so let's talk about how we make a profitable business, right? If we're in e-commerce, if we're in direct to consumer, we're primarily operating on the internet. Like Barbell Apparel is somewhat omni-channel. We drive revenue from other places, but it's mostly D2C internet play. And I imagine most of the people watching this video is the same. Like you might have a little bit of wholesale, maybe wholesale is even half your company. But the part that you have a lot of control over is the direct to consumer side that's predominantly taking place on the internet, right? And so like, what is the internet? Essentially, the internet is a giant auction house for eyeballs, right? Like everyone is fighting, competing for attention in the form of web traffic so that you can get customers to learn about your product and hopefully buy stuff on your website, right? And so really, the only way your business ever drives revenue ever grows is marketing, right? One form or another. It could be grassroots marketing, it could be word of mouth, it could be organic content, it could be paid media, it could be any number of things. But for most of you guys, the thing that you have the most control over is going to be paid marketing, right? And that can take the form of, Meta, Google, TikTok, paid influencer, things like that. You can go beyond that, but usually the direct response advertising is going to be the stuff people play with first because it's easiest to start small and scale up. You can be really risk averse because you can only invest money as you see results coming out, and you can see the results kind of happening in real time. They're on a little bit of a time delay, which we can maybe talk about later in another video, but that's kind of where most people are going to start, right? And so I think I was speaking at a convention once and I said, just kind of off the cuff, that the best way to be a $50 million business is to be able to spend $25 million a year on marketing. And maybe that's a little bit of an exaggeration, maybe not. I know some larger businesses that spend a larger percentage of their total budget on marketing, and I know some that spend far less. It kind of depends on how the economics of your business work and what your broader strategy is, but the end result remains the same, right? Like, your business can only grow by a factor of what you can invest into marketing, because otherwise people don't know you exist. And so all revenue is tied to your marketing efforts, right? And we can do a lot of things to make that more efficient, to improve the ratio of the amount of marketing dollars we spend to the revenue we're getting in. But at the end of the day, if your business can't afford to market, it cannot afford to make a profit and it cannot afford to grow, right? Like, I guess at a very small level, you could potentially just get all your sales through like your own elbow grease, but that doesn't scale very well, right? Because you're going to run out of time and effort before you hit any of your revenue goals. So in talking with a lot of businesses and some of the people I consult with, it's interesting to me how many people have never even gone through a simple contribution margin worksheet, right? And so what is a contribution margin worksheet? It's really just a formula to figure out how your marketing is going to result in profit or loss on a new customer acquisition, right? So it's typically going to be your average order value minus marketing cost, minus cost of goods, minus cost of fulfillment, minus returns allowance, right? So basically your gross order value minus all variable costs is going to be your contribution margin, right? We're not taking fixed operating costs out of this, just variable costs. And that's really the math that makes your business work. And so you can do that today, right? Just I could put together a spreadsheet. I'll link it somewhere, but for you guys to use. But it's also simple to put together on your own. You just again, take your average order value from Shopify or whatever your platform is, and then deduct your average cost of goods, your average cost of fulfillment, your average returns allowance, and your average cost of customer acquisition, and then play with those numbers to see what the actual contribution margin or the leftover profit is, and that really is your ability to scale. So for some of you, you'll put in those numbers and you'll have profit left over. Awesome. For some of you, you'll be like razor thin, and for some of you, you'll be at a loss, right? And either way, no matter what scenario you find yourself in, the goal is to make that contribution margin as big as possible, because really that's your ability to scale the business, right? Because that is the money that you pay for operating costs with, that you acquire new customers with, that you reinvest in a new inventory with. That's what it takes to scale the business. And if you haven't done that exercise, it can be quite revealing, right? And if you go through this exercise and you realize that your current customer acquisition cost is resulting in a contribution margin loss, which many people will see that, right? What's probably happening is you're either losing money as a whole, which again, we can fix that, and we'll talk about ways to fix that situation, or potentially your existing customer base is kind of subsidizing your new customer acquisition, right? So you're generating profit off of the customers that you already have, that you're not having to sink a bunch of acquisition costs into, and that profit is helping subsidize the acquisition cost of the new customers, right? That's a pretty common scenario. Either way, what we want to do is pull all of the levers we can to make that contribution margin as high as possible so that we can grow the business as quickly as possible, and also just have less stress, because when we have more profit, we have more options, we have more margin of error, we have tons of things, right? And so really, I'll talk about kind of like advanced business scaling, because we're talking about this contribution margin stuff. It's like, in an ideal world, on a first-time customer acquisition, you make tons of profit, right? That'd be the ideal world. In reality, going back to the whole internet as an auction house for eyeballs thing, that's not always the scenario, right? Because you can do a lot of things to optimize your customer acquisition costs, but in reality, it's an open market. So to some degree, your competitors and the competitive landscape is going to dictate what a customer costs. Now, again, like, you can control the outputs on your website, right? Like you can do things to manipulate your average order value, to get people to spend more money. You can do things to make your ads more engaging, to make your audience targeting better. And so you can manipulate the numbers a bit, but at the end of the day, there's only so much malleability into that actual customer acquisition cost, because some people, right? If, like take Meta, for example, if I'm selling a niche product, let's pick, I don't know, say I'm selling like a niche pet product, right? And there's a finite, maybe there's 10 million people in the United States that want this niche pet product. Well, if anyone else wants to be in that space with me, I have competitors, they're going to be bidding on that same 10 million person audience, right? And I'm going to be competing with them with my budget. So at the end of the day, like if they're willing to drive up costs to saturate that audience, you're going to have to deal with that reality and compete with that. So anyways, the point remains that we should always be working to optimize everything, get our average order value as high as possible, make our ads and audience targeting as engaging and as targeted as possible, so that we can arrive at the most efficient costs. But at the end of the day, your customer acquisition cost is more reality than it is like a completely arbitrary variable, if that makes sense, right? And so what we have to do is pull all the levers around that to make that customer acquisition cost work, right? And so if that means we need to get people to buy more units to raise our average order value, or we need to make our operation more efficient to drive down our cost of goods, or so that we can materialize more profit because our shipping costs go down or our return rates go down, whatever it is, these are all the levers that we need to pull to make it so that our business can effectively market and effectively scale over time. Now, talking about kind of like advanced scaling and kind of how this competitive landscape works, the most advanced businesses may be willing to lose money acquiring customers, right? Because they just want to grow as fast as possible and want to saturate as much of the market as possible. And there's kind of two types of businesses that are doing this. One is businesses that still have a bunch of venture capital or outside investment. And so they don't mind burning money today for either like hopefully a sound strategy in the future, or maybe it's just a financial arbitrage scheme and they're hoping to exit before the whole thing blows up. That happens more often than you would think. But either way, let's talk about the business doing it the right way. And so the business willing to lose money on acquiring a customer the right way is going to make their profit on the customer's lifetime value, right? So they may say, hey, my average order value is $100. I'm going to lose $20 acquiring a customer. I know that. But our average customer buys again in month 2, in month 3, in month 4, and they're spending $100 each time. So we're going to make plenty of profit over the near term that we can reinvest in the business. And so I'm willing to lose that money. You have to know if that works for your business or not. I would say that every business should move towards a place where they can get there. And you still want to try to acquire customers profitably if you can. But that's how advanced businesses are doing it. And that's why you see customer acquisition costs in the bid systems going up, right? Because more advanced companies can simply afford to spend more on their customers. And really, it's like your job is to make your business as close to that as possible, right? Now, no business is buying up all of the inventory. So like you can spend money at a more efficient level at certain levels of scale and be more efficient with your customer acquisition costs, because you're not trying to saturate, again, going back to that niche pet example or whatever, you're not trying to saturate the entire 10 million person audience. You may be fine with 1 million people or 50,000 people or whatever it is. But as you go to scale the business, you're going to run into more and more competition. And so you need to make sure that you just have these things in your mind as you go to build the business, right? And so really, if we're talking about what it takes to scale a business, that's it at the end of the day. You have to sit down and look at your contribution margin, and you need to be honest with how your business works. Like go in, Shopify has a built-in cohort analysis, so you can go in and look at that and see like, are my customers coming back and buying with a high enough frequency in the near term for me to go thin on my customer acquisition costs? Or do I maybe have like a one-time buy type product and I really need to just be super militant about making sure that I'm squeezing every contribution margin dollar possible out of that first purchase, because that first purchase might be the only one I have, right? And we want to deal with the reality of where your business is at today, and then we can implement strategies to make it stronger tomorrow. But like a lot of those fixes are long-term, right? So you want to deal with the reality of today. So if you have one product that people buy one time, then you need to just get like savage about making sure that your ads are super engaging, that your audiences are super well targeted, and that you're doing everything on your website to maximize sign-up rates via your front-end offer, your pop-up, that you're maximizing conversion rates with your email and SMS campaigns and your automations, delivering that front-end offer to people, and that you're doing things on your website with upsell apps and order bumps and all these things to make that average order value as robust as possible. Because if you're only getting people to buy one time, that contribution margin is all the money you're going to make. Now, you still acquired that customer, and hopefully you can deploy strategies in your business to develop new products and get those people to remonetize in the future. But again, we're dealing with the reality that you have at present day. If you do have a repeat purchase value, then again, if you do have a decent amount of customers coming back and purchasing on a repeat basis, then you don't have to worry quite as much about that first time contribution margin. Again, we should always make it as strong as possible. But really what you need to do is look at like, hey, how can I get these customers to come back and buy again faster? How can I get them to come back and buy again faster and spend more money, right? And again, you can pull up the cohort analysis in Shopify. If you're on another e-commerce platform, you can usually install an app that'll help analyze that. But it's like really you want to look at implementing solutions. Again, like own marketing is probably the linchpin for this. But you want to implement own marketing solutions that help those customers come back and buy again. And you'll see these fall off inflection points in that cohort analysis, right? You may say, okay, 20% of customers come back in month 1. Awesome. 15% come back in month 2. Still pretty good. 5% come back in month 3. Really, right? And so really, it's like we know where our fall off point is, but we always want to start with the most impactful place first, right? Because like if I can double the month 3 repeat purchase rate from 5% to, that's only a 5% delta, right? But like increasing the month 1 conversion rate from 20% to 25% is the same result as that month 3, but a much lower order of magnitude, if that makes sense, right? So I would always start at the more recent cohorts and then work your way down, trying to improve that frequency. I realize these are a bit advanced concepts, so if you have questions or whatever, DM me, leave them in the comments wherever this is getting distributed, and we can go over more in depth, maybe in a follow-up video about how to accomplish some of these things. But that's really how I would be thinking about this stuff, is looking at that contribution margin, figuring out what levers we need to pull to make that math work for our business, backing it up with a ton of strong owned marketing to make things as efficient as possible. And then if you want to get more advanced, right, the bottleneck of owned marketing is that only a certain amount of people in your list are ever going to see your emails because inboxes get crowded, people are busy, etc. And so really you can use that own marketing ecosystem to create audiences in your paid media, and then use like reach-based campaigns that are much cheaper to help push deeper penetration of your messaging into those audiences, right? And it all kind of relies on a healthy ecosystem on your website with your own marketing, with your contribution margin, things like that. So anyways, you guys let me know any follow-up questions you have, and we can get more in the weeds on another video, but I hope this is helpful.